Holy smokes, ladies and gentlemen, the stock portfolio is up $7,000 in just 2 weeks. We're going to do an entire breakdown. We're going to be taking a look at some of your recommendations you guys picked. I'm going to be reviewing some thoughts on the MJ sector as MJ 2.0 just got released by the government. And then on top of that, we're going to do a quick overview of some of the news going on with Tesla because that's just hype right now. So ladies, gentlemen, let's jump right into this.
Drop it.
Welcome back, my passive income investors. Do you remember Francisco, Portuguese monkey with Russian accent? If not, it's okay. I made a video about a month ago where I used this monkey to pick 12 random S&P 500 stocks to see if I could outperform a monkey. So I opened up a margin account, which is currently up $5,800 from the starting $100,000. And this is in Canadian, by the way, which is doing exceptionally well, but even a monkey can make money in this market. Now, my rule of thumb is if I underperform the S&P consistently over a few years, heck it, I'm liquidating all my assets and just buying index funds, and that would probably be the abolishment of my YouTube channel. But luckily, I'm still able to outperform the monkey and the S&P 500. So taking a look at my own account, jumping into the combined portfolio here, we're looking at 104,670 USDs, the equivalent of 137,000 CAD, which you have to remember over 2 weeks ago, I was only sitting at 130,800. So that's a change of about $6,000 in 2 weeks. And nothing's really changed on the dividend side because I haven't been buying more stocks. I've been patiently awaiting to see if I can find some personal deals, which we're going to get to toward the end of this video. But going over all the accounts really quick to give you guys a full idea of what's going on, starting with the tax-free savings account, which is up $17,352. Absolutely incredible stuff going on in here. We got my managed account, which is up $77. Not much going on in here, but we had some dividend payments coming in, which I'll break down from MO in a quick sec here. And then the RSP account, which has been on fire because of companies like Tesla, and I got a really good price in at Johnson & Johnson, right around 137 on J&J, and we're at 148. Tesla, I bought around 355 average, and we're at 510. And I'm also going to break down some Tesla news at the end of this video. But moving forward with my final account, we're looking at the RBC account, which is only up $258. It represents about 3,200 CAD, and I like this account because it's basically a brand new account. I've been using RBC to build a line of credit, and I might consider buying most of my stocks this year within this account. But taking a look at the dividend payments, guys, we had MO pay out $273 from all of these accounts combined. We had Northland Power pay out, and we got RioCan paying out $27. Now, as many of you remember, I sold VFV to buy Tesla and some more J&J, and I ended up getting an extra dividend payment from that because I was still within the dividend cycle. So I got $23 from VFV. Now, my final dividend payments for this month that are going to be coming in will be coming in from BNS and CM, luckily in the TFSA, so it's 100% tax-free, and that's going to be about $150 from each of these. So we're going to see some really good payments coming in toward the end of this month. This is a good reminder that if you guys are tracking multiple portfolios, you should consider getting this iCloud spreadsheet because it tracks your stocks automatically, and it's something that my buddy Matt put together. It's $12, and it's been life-saving for me just because it really brings everything into one place. But as of recent, I made a video about, literally yesterday as of recent, about how I thought dividend stocks were overvalued, and I got a lot of interesting replies on this because things are just sitting at unusual highs in my personal opinion. The markets are a little frothy, and we've noticed that you guys actually gave up some really good comments in this video, and you recommended a lot of stocks. So I want to go over a few of your recommendations, and a shout out to Ian Penswick, if I said that right, because he had this funny comment where he says, in an alternate universe, you must be Batman's ultimate nemesis. Love your show, by the way. I really appreciate that, man. That was a really funny comment. But let's take a look at some companies here like CVS and a few other ones you recommended, starting with Wells Fargo. This was one of the first ones you guys brought up to me because I told you I was interested in maybe looking at adding another financial piece to my financial sector here, or a bank to my financial sector. And taking a look at Wells Fargo, as of recent, it had a pretty decent 10% drop based off its news with a 4.19% dividend yield. This one might be coming into fair valuation with a PE of just under 12. Looking at that CVS stock you guys recommended is a health. It's like a retail pharmaceutical company. They run pharmacies. I'm sure you've all been to something. I don't imagine their pharmacies are like the big retailers, like Shoppers Drug Mart. So I'm not too sure about how I would gauge this company. I have no research into it, but it does look like it's been on a bit of a discount. discount from all-time highs, paying out a 2.63% dividend, and the PE is somewhere within mid-range in the current situation the entire markets sit at. Finally, the last one is MKC, which is another really odd one I've never looked into because this is a spice company. That's right, they make spices, so it's kind of in the food sector, and I don't know why you would think this is on sale. It trades at a PE of 31 with a dividend yield of 1.48%. So there must be some growth behind this for you to be recommending it, so maybe something to do some more homework on. Now, a lot of the interest has been in the MJ sector, and it has been lit up in more ways than one. As most of you are probably holding Aurora, the MJ stock. I notice a lot of guys are down on this position, been holding it for a while, and this is still considered one of the best you can pick in the MJ sector, even though it is down a ridiculous amount from all-time highs. But I think we're going to start seeing some turnaround, and why am I saying this? Because the government just introduced MJ 2.0, and what is that? Well, they finally made edibles legal, they made vapes legal, and they just sold out overnight, which is going to be looking pretty good on the next quarterly earnings for some of these big MJ stocks. Now, the problem with this sector, and the reason I analyze it so much, is because I made a lot of money trading these stocks a few years ago. But as of recent, I've been dying to get back into it, but I really want to see who the industry leaders are. And the problem is none of this stuff is proprietary because anybody and their grandmother can open up one of these companies, and most people are just growing in their backyards. Heck, I live out in the middle of nowhere here in Ontario, and I have three grow ops right around me, like within 5-minute walking distance. It's quite insane. So right now, we just want to see who's going to pick up most of the sales, who's going to have the best selling products. And then what you want to do is over the next quarter or two, find maybe those 2 or 3 companies that are leading the race and start loading the boat. I would not be doing it right now just because we don't know who is going to be winning. Mind you, I do have exposure to Kron through MO because MO owns a huge stake in Kron, and I love that way of exposing myself to this industry because at least I'm getting a really big dividend. I'm getting exposed to a multi-billion-dollar company, and if everything works out, heck, I'm not going to see these massive doubles, but my dividends will increase from where they are, which MO pays a healthy 7%, or that's what my average yield was. So I'm going to ask that you guys pay attention to this sector. It's going to be something that I'll probably be highlighting a lot this year, and heck, I might even consider picking up some shares in one of these companies maybe in the next 3 to 6 months. So this is going to be some really exciting stuff to just sit on our hands with and see where it goes. But finally, Tesla. Oh my goodness, ladies and gentlemen. This has been the hype stock of the century as of recent. There's been a lot of downgrading analysts coming out. There's a lot of banks that are saying, oh, look, Tesla's a great company in the EV market, but you're going to probably get a better price in the near distant future. And I agree with that on some extent because Tesla's been on one heck of a tear, and you can't go on runs like this without people taking profits. So we've seen a little bit of a pullback, but not nearly as much of a pullback as I would have been expecting. I'm going to continue to hold on to this stock. I don't mind it going into the next 3 to 5 years, hoping we're going to get some growth. But you got to remember, this company, considering it doesn't sell nearly as many cars, and I'm not calling this a car company. I told you it does solar. We're talking about self-drive. We're talking about all kinds of stuff. But if you're just comparing it to the auto sectors, it's worth what? Ford and GM's market cap combined. So, I mean, there's some really interesting stuff going on in this stock. It is like what Bitcoin and the MJ sector used to be. So 2020 starting off right because this is the exact company I like seeing moonshoot into these unicorn phases. We haven't had a unicorn in a while. I don't know if you guys have ever heard of the term unicorn, but finding a unicorn is a rarity. And Canopy Growth Corp was a unicorn for me because, like I said, I made somewhere between like 25, 30K on that stock, and it was like my first big run. And these unicorns are rarities, but luckily Tesla has been one of those for me. Mind you, I consider the entire markets right now to be in unicorn phase because anybody can make money. And a lot of the news right now going on with Tesla, there's been some hate going on with it because allegedly they had unintended acceleration problems. And I think they just came out with this to try and bring the stock down. It could just be some kind of bug where the car would pick up speed. But I've owned cars that had the same problem. I mean, I had a 2001 Grand Am once upon a time where the computer messed up and it was always revving really high. So if I never even touched the gas, it would start picking up speed. And I tested it one time and I got the car up to like $120 where it started leveling off. Now, I don't know what causes that problem, so I ended up scrapping the car because they told me I needed about a $1,200 repair. But where do we sit from here, guys? I'm sitting tight. I'm sitting happy. I'm keeping things pretty conservative at this point. I'm not going to be throwing huge money around within the portfolio as of now, just because I don't see any major deals out there. I've talked about things like Carnival Cruise, but the problem with the companies that are on sale right now, or I consider value, they're not good long-term stocks. I like those generational stocks where I can believe and trust in them, but most of the companies that are on sale right now and where most of the interest is in those kind of, Russell 2000, those small cap stocks stocks that are starting to outperform the S&P because people are finding better deals in small caps. The problem is that comes with excessive risk, and companies like Carnival Cruise and all these other companies that are in what I would consider like a good fair value don't have good long-term prospects because if heaven forbid we actually head into a recession, those are the companies they get dinged the worst because obviously people aren't going to be going on cruises if their portfolios and their income is dropping. So I mean, the markets sit in some incredible places right now, guys. I'm sitting happy. I'd love to know what you think about all of this in the comments section below. And like I said, I am so happy with where my portfolio sits. I could even just start spending the dividends at this point if I don't want to reinvest them and maybe look for another place to put them. As I've mentioned, I've been looking into building further online businesses where I think I'm going to see some better potential. So in the meantime, we're just going to be sitting tight. We're going to be collecting dividend payments. And if something comes up, you'll be the first to know what I'm buying. If you enjoyed the video, consider slapping like and subscribing for future updates of Portuguese Monkey Francisco. Stay cool, stay awesome. I look forward to chatting to you real soon.